Welcome to Kaiser Watch with John Kaiser. I'm your host, Jim Goddard. John, welcome back to the show.
Jim, pleasure to be back.
John, what was the mood like at the Metals Investors Forum in Vancouver, and did anything catch your attention?
Jim, the mood was surprisingly upbeat given the thrashing the juniors have received, the declines in metal prices, and the general negative outlook about interest rates continuing to be pushed up to fight inflation, possibly tipping the economy into recession and taking the overall market down even further. My presentation and the panel discussion that took place on Saturday afternoon with Gwen Preston, Eric Coffin, Peter Crouch, Brian Lenny, and myself, they are now available on YouTube, as well as the company presentations and interviews with the whole group, all the ones done at the Metals Investor Forum. But I've assembled the ones that were part of my group into a care or a blog comment. You just go to my homepage and you can click on it and you can go directly and listen to each one. But my theme, of course, was emerging discoveries. And one of the questions posed to the panel was, when do you think it will be time to go back into the market? And the panelists in general were hesitant. It was a wait-and-see type of attitude, which is not surprising, because then a few days later this week, the inflation rate came out, and it turned out to have increased slightly in August, so that on an year-over-year basis, it's 8.3%, up from 8.1%. And that has created a bit of a miserable week for overall markets, as everybody says, oh boy, inflation is persistent, it's not going away, the Federal Reserve is going to jack rates higher, and of course the U.S. dollar has risen relative to other currencies. Yesterday the Canadian dollar was 1.32 for one U.S. dollar. So the outlook in general was negative. But my response was, the time to buy is right now, and that the real question is, well, where should you focus? And I don't think it's yet a great time to buy ounces and pounds in the ground, because metal prices may end up lower yet. And in fact, this week there was one day where gold took a $30 bath all in one shot. And nor is it time to look at a prospect generator and see this target that they've developed and bet ahead of drilling that this target will result in a fantastic new discovery. My theme, emerging discoveries, is a special concept that only occurs in this type of market, where stocks have already declined. They're clearly in a bear market, but there is this sense of dread that the worst is yet to come. And in this type of market where the glass is worse than half empty, where it seems to be like 90% empty, this is where you can see companies that have a drill program deliver results which at best has a modest impact on the stock price. Not a big impact, because they're not barn burner results, but they're results that show that a target has turned into the beginnings of what may very well turn out to be a major discovery. So you have time to monitor for these, to research it, make sure it all makes sense, and place your bet at best with a modest price markup. This is a very special time, and last week I devoted the entire Kaiser Watch to talking about the 5 companies in my session, which were Arctic Star for diamonds, Canalaska for uranium, Copper Lake for base metals and silver, Endurance Gold for gold, and VR Resources for rare earths. Now, one of my subscribers complained that, well, why didn't you have Patriot Battery Metals at the conference? Isn't that an emerging discovery? Well, Patriot Battery Metals is an example where the results have already allowed that discovery to emerge. The company has a market value in excess of $500 million based on the Corvette pegmatite deposits, where they've delivered 1 to 2% lithium oxide intersections, which are $1,200-$1,500 rock value, depending on what lithium carbonate price you use. So this is an example of an emerged emerged discovery. And this week, the company surprised the market by raising $20 million at twice the market price, with thanks to these 30%, this new 30% critical minerals flow-through benefit that the Canadian government is now offering for Canadian projects. Now, my collection of companies, none of them involve lithium. My June show in Toronto at the Metals Investor Forum then, that featured 2 lithium companies, and that's where I talked about Lithium Mania 2.0. And although my emerging discovery concept assumes that the discovery will work at the metal prices that we have, and it doesn't matter if they go a little lower, the beauty of an emerging discovery is when it hits that critical mass and becomes a major discovery, it becomes a bubble unto itself where the participants couldn't care less what the general metal price trend is or what's happening in the economy. And that's what the junior discovery exploration game used to be about. But I've been also a big booster of Lithium Mania 2.0 because while all the metals have declined, lithium carbonate has stayed above $30 per pound. I think that even if it drops to $10 a pound, that's still a great price for these pegmatite, lithium-enriched pegmatite deposits. And when you look at the overall numbers, the car companies, they're committed. They've gone beyond the point of no return. They are committed to replacing internal combustion engines with electric vehicles by 2035. And for now, the lithium-ion battery is going to be part of that future electric vehicle. So you can see this huge problem that's not going to be solved by the lithium triangle brines in South America or the lithium pegmatites in Australia and Eastern Canada and perhaps some other parts of the world that aren't currently significant lithium producers. They are going to provide that other half of the 1 million tons of lithium metal that are going to be required by 2035. So if you've got a lithium pegmatite play, you have a chance of going from, perhaps even skipping the emerging discovery stage, because we're in a market where the investors can see that they're learning how to do the math. If you have a large enough body and you get a drill intersection through it and it runs the right grade and you can start doing the 3D math, you can very quickly see that the discovery has emerged. And that's what's happened with Corvette, with the Corvette project of Patriot Battery Metals. But in these other situations where you don't have a huge intersection, you have to look at the context, the geological context. What are these results telling us about the geological context? Is it showing us where if you drill more, you will get that intersection that validates the showing or the intersection as a major new discovery? And that's what I like about this particular market. So while the others sort of hemmed and hawed about when to move in, I say look for this kind of project right now. And looking at the other companies at the Metals Investor Forum, there was one that really stood out. It was Headwater Gold, which is a relatively new company. It listed on the CSE in June of last year, started trading on 60 cents and promptly tanked below 20 cents. It was formed by Caleb Stroop and Alistair Waddell. They're both formerly of Kinross. And its strategy is to track down low sulfidation epithermal systems in Oregon, Idaho, and Nevada. And they're looking for ones where at surface there's maybe a center cap which never really has anything in it, and at best there's been some shallow holes poked into it, and it's been sort of mediocre gold grades, nothing particular special. And their goal is to figure out where that feeder zone is at depth, where the boiling zone is, where the high-grade bonanza type grades, the veins, would evolve, where you have potential for like a 1 to 2 million ounce high-grade gold silver discovery. And so they have 10 of these projects, and one of them called Katy, it's in Oregon. Earlier this year they reported 14.5 meters of 5 gram per ton gold, and within it was a 2 meter interval of 24 gram per ton gold, and this was deeper than any past past drilling. And of course, some of these things, they never developed the bonanza grades at depth. The system just wasn't right for it. So their goal is to track these types of systems down, try and figure out with scout drilling where that feeder zone is, put the holes into it, and then follow up with further drilling. Now, Katy, that intersection by itself does not constitute a barn burner discovery. It's not like the Fruta del Norte intersection of Aurelian delivered back in 2006, but it's what I would call an emerging discovery because you can understand the geological context. You can see what needs to be done next, and it's just a matter of time for them to get these other drill holes in there and confirm it. It's not guaranteed to emerge as a major discovery, and the stock barely responded to this news at all. But even more interestingly, in mid-August, they announced a very strong deal with Newcrest, the big Australian gold miner, which has taken out Pretium, which is a high gold producer in the Golden Triangle, and it also owns is majority owner of the Red Chris deposit with Imperial Metals, and they're clearly interested in gold systems in North America, or at least where there's an important gold credit. And this deal on 4 projects, it allows Newcrest to earn 65% by spending $55 million US on Spring Peak, which is in Nevada next to the Aurora operation of Hecla, and $30 million on each of the other 3 projects over 3 to 5 years or so. But what's important about this is that they have to spend at least $8.5 million over the next 2 to 3 years, depending on the project, or give that money to Headwater Gold if they decide that, this is one of those dots. This is like fortuity of Discovery Arbor. When we go down underneath it, it's just not there. The system isn't fertile enough. They still have to pay that difference. So it's a strong deal in this regard. And it also allows them to go to 75% by funding a pre-feasibility study and delivering at least 1.5 million ounces of gold equivalents for that project. And what did the stock do to that? Despite having only 60 million fully diluted after the 9.9% financing by Newcrest, it moved from 15 to 20 cents up into 20.25. So here we have a scenario. They have the Katy project already with an intersection that suggests there's a bonanza zone to be delineated. They've got 5 other projects that they still own 100%. And then they have these 4, which are of sufficient interest to Newcrest that it's willing to commit $8.5 million over the next few years to assess whether these are high-grade gold-silver systems. And one of the things I found really interesting was 2 of the projects, the Midas North and the Spring Peak, which are part of this property collection, they're both next door to mines owned by Hecla. And it struck me as peculiar. Maybe Hecla is going to be a future takeover target for Newcrest as it continues to expand its presence in North America, because Hecla does specialize in high-grade gold systems. So the Headwater Gold was the junior. That wasn't one of my companies that I discovered at the Metals Investor Forum conference in Vancouver that I would certainly want to add to my collection of emerging juniors, where you're not getting a crazy valuation. You're still having a valuation as if the company has not yet hit anything that qualifies as an emerging discovery.
Verde Agritech revised its production guidance for 2022 downward last week. What was that all about?
Now, it was very bad timing for me because I was in the midst of preparing for doing all my interviews and presentations for the Metals Investor Forum, and then I get this stinker news release coming across the wire. It turns out that this road, there's about 20 kilometers or so of it, 14 kilometers of it requiring asphalt that leads to the Plant 2 operation in Brazil. They were doing some grading work ahead of putting asphalt on top of it when they just encountered groundwater problems. And it appears what happened was in at least 2 critical areas, the water table was close enough to the surface that as they were grading or leveling this road in preparation for asphalt, they managed to touch into the water table, and next thing you know, they got water sort of burbling up onto the into the road bed, making it unstable. And of course, you can't put asphalt on top of this. And the whole point of this is to make sure this road is capable of moving 2.4 million tons annually of K Forte from the Plant 2 quarry site to the various farming operations in Brazil. So they realized this may take 4 to 8 weeks to fix. We need to bring in rock and just pile it in there and create a stable bed and rebuild it and make sure the road is stable. And because they were already cutting it close, they only commissioned the first phase of 1.2 million ton per annum phase of Plant 2 at the end of August. September, October are key shipping windows. So now they had the problem. Yeah, we've got the plant operational, but now we have a delivery problem. So they decided to bite the bullet and revise their guidance from 1 million tons per annum downwards to 700,000 tons. And in their latest revision for the sort of third quarter and the fourth quarter, they've originally expected 354,000 tons for the third quarter, but now it's only going to be 188,000 tons. And they expected a similar amount for the fourth quarter, and it's only going to be 198,000 tons, even though even though the plant is expected to be operational within 4 to 8 weeks. But the planting season ends in October. November is when the rains begin. And by the way, this was not caused by a washout from torrential rains or anything that took out a bridge or created a new river crossing across the road. No, this was during the bone dry season. It was simply tapping into the water table. Their geotechnical drilling had not detected that there might be this problem. So they've gone back to their 700,000 ton per annum. The market was not happy about that. It was not happy that they saw Chris Veloso sell some stock at $8, even though his automatic selling program only kicks in at $9 and higher. I talked to Chris Veloso about this, and he said, well, this was a one-time sale I had to do to pay for a domestic transaction that his family was engaged in. So that sort of selling was gone with, but the stocks drifted down to $5 a share. Part of that is also due to the generally negative market outlook. This week was pretty bad as a result of the CPI numbers on Tuesday, and the next window for any sort of numerical news would be November 15th, when the third quarter results are due, and the year-end results, they won't be available until roughly mid-April, when the audited financials are due. They've also had delays with their NASDAQ application. Apparently, this lawyer that they hired still hasn't filed the application, so it's unclear when and how that will play out. But the CEO is quite comfortable with his revised guidance, which is basically back to where it was in January of this year. It would still, if they manage to deliver this product and sell it at that average price they're expecting, it would still generate almost 87 million Canadian for the year, with around $31 million EBITDA in Canadian dollars. So those are still impressive numbers for a company that has 53 million shares fully diluted. It's a wonderful opportunity for the institutions who have been watching this. To a large degree, Verde Agritech has been a retail phenomenon. It has been ordinary investors who have been buying this and experiencing this ride, which I think almost hit $12 earlier this year. The institutions, they're not exactly the kind to follow retail into a success story. Now that we've had the more grandiose guidance from that was introduced in May dialed back, they're now watching this, looking for an opportunity to come in. The company is going to be putting out a series of announcements, updates over the next while, just to show what progress is being made, whether or not they got this road fixed and everything taken care of. A number of these things have been working on some other projects. We'll find out what those are and where those ended up. But one of the things that I personally was very happy about as a result of this reality check for management is they have suspended this BS about promising to pay dividends or buy back stocks as a way of returning the cash flow. I mean, this is an example of hubris where management gets so full of itself and starts promising stuff that makes absolutely no sense for a company that's a growth story. This is a growth story. This is not a sunset company that's going to grind a cash cow, that's going to grind out cash flow with which they can't do anything. These guys want to ultimately replace 50% of Brazil's potash consumption with K-Forte, an alternative form of potash. So store up your money, save it up, and as your revenues grow, you're going to have an ever bigger number of receivables that you're going to have to bankroll. Stop talking about paying dividends and all that. That's for retirees who are actually, they are the biggest beneficiary of all this bad news on the inflation front, because retirees who typically keep their money in the bank as a savings deposit, they've been getting squat in terms of interest rates. So, well, now they're going to get better interest rates as these rates go high, and they're not necessarily buying all this stuff that goes up in inflation, and then most of them are pretty good at figuring out bargains and so on. So this bad news for the rest of us in the general market is good news for retirees who are risk averse, who are not savers. In terms of Verde Agritech, well, there's no particularly strong reason for the stock to take off in the near term. That window from November until the end of the first quarter is a quiet period because that's not when farmers are planting crops or fertilizing them. So in terms of seeing escalating sales, that won't happen until the second quarter. But what we do hope to hear in the meantime is, yes, this road is working, it's all fixed up, there are no more problems, and both phase 1 and phase 2 of plant 2 are now fully commissioned and able to operate and start producing product for delivery to the Brazilian farm sector. And as with the price retreat to sort of $5 level, this concern that in October that there might be political chaos, depending on how the election goes out. On October 2nd is the election. If nobody gets more than 50%, then the top two parties, which are likely to be Jair Bolsonaro and Lula, they go into a runoff on October 31st or somewhere at the end of the month to decide who it is. And the anxiety has been that if Bolsonaro loses, he's going to claim a stolen election, and all his followers are going to start rampaging around the country, and maybe the military will say, yeah, this was a stolen election, and then we get a military coup and reversion back to the dictatorship that Bolsonaro craves for from decades ago when Brazil was a military dictatorship. And yes, there would be a knee-jerk reaction in the market, but right now the market assumes that Lula will win, so whatever negative consequences come from that, that's already baked into the market. And if we go through this and Bolsonaro wins, well, not much is going to change. And even if he loses, it may be unlikely that he's able to stir up a fuss that goes beyond maybe some local tempests by his supporters. So it's unfortunate that the uptrend has been disrupted by this groundwater problem, but it also brings us away from these unrealistic expectations that were created in May with the revised guidance. It took longer to get Plant 2 operational than expected. So now the company with these numbers, if they meet this initial guidance from January, it's still going to be a very strong company, and it's going to be very attractive to the sort of institutional audience that this shareholder base needs to migrate to in the near future.
Does FPX Nickel have a potential clean solution for Tesla's nickel sulphate supply problem?
On September 7th, FPX Nickel published a long news release about the scoping study it did on converting its 60-65% nickel iron concentrate into nickel sulfate using a hydrometallurgical process. And while there were no numbers in this announcement, it was a lengthy description of what's involved and how it compares to existing methods. It looks like they're going to be capable of generating 43,500 tons of nickel sulfate per year from this operation. If this is the path chosen, there can be two ways of doing it. Either have a plant on site that produces nickel sulfate in a crystal form, or in a solution form that ends up getting trucked to some facility where the groups that upgrade it to the final battery cathode form are located, and which are probably going to be located close to where the battery makers themselves are located. One of the interesting things to come out is that the concentrate, the ferro-nickel concentrate, has 1% cobalt in it, and the work they've done, they're not going to produce cobalt sulfate, but they will produce an intermediary cobalt product that's 40 to 50% cobalt, and that could constitute 650 tons per year. Now, by the time the car will ever be in production, it would be 2030, and it's possible that cobalt only has a minor role to play. And 650 tons a year could be very significant because it would be certifiably clean cobalt byproduct from this operation, which itself is going to have a lower carbon footprint than any of the competing technologies that generate nickel sulfate, either from a laterite cycle or from nickel sulfide concentrates that have been turned into refined material. So the basic message that they said, okay, we have figured this out. We need to do more testing with it. They've got 17 tons of concentrate, which they're going to feed into 17 tons of material, which they're going to convert into the ferro-nickel concentrate, which itself will then be subjected to metallurgical pilot tests to generate product, which can then be delivered to various customers for purity examination. They expect all of that to be done by the end of the year. And the market, even though this was a bad week, did respond positively. It was below 50 cents when the news came out last week, but the stock had managed to creep up to 60 cents. But of course, this has been a really bad week in general, so it has fallen back. But them putting this all out shows that although they didn't publish any of their numerical numbers, their monetary numbers with this, the fact that they put this out there means that they think that with the associated costs, they can sell this at a competitive price to all these other technologies, plus the ESG credits that come with this. So this really opens up the opportunity for the car makers to make meaningful deals to support this company. It'll be an interesting first half of next year when we start seeing this material, nickel sulfate material from the pilot plant be made available to these car companies, and see if we get concrete deals from the likes of Tesla or Volkswagen or any of these others saying, we want to support you. We want to be first in line to get this material to feed our batteries with a certifiably clean source of raw material input.
John, thank you so much for the update.
You're welcome, Jim.
We've been talking with John Kaiser. I'm Jim Goddard. Comments made on Kaiser Watch are an expression of opinion only and should not be construed in any manner whatsoever as a recommendation to buy or sell any financial instrument at any time. Archived online at kaiserresearch.com.